Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I have a couple thousand YouTubes up. I am a former IRS agent. I've worked about 10,000 cases. I usually don't have this suit on today or my coat. I have worked at IRS for a decade. I have a whole team of former IRS agents on staff. I've been on all the major news stations. They wanted my opinion. You can go to my website at 777 and see all my national interviews from Fox, ABC, NBC, CBS, News Nation, Newsmax, NTTV, a whole bunch of stations. Anyway, if you go to my website, you'll see my team, which is really more important. Like I said, I work as a revenue officer. I worked offers and compromise, payment agreements, and hardship. So today what I want to talk to you today is how do you qualify for an IRS tax hardship. You should know the technical term for the IRS tax hardship is called a currently non-collectible case. The reason it's used currently, a hardship isn't a hardship forever. It's a hardship currently. That means IRS has looked at your financial statement, and based on your financial statement, they said, we can't collect it now, we'll put it in the shelf, and maybe at some point the IRS algorithm may kick this out. There's a series of reasons why your case come out. Either the revenue officer or manager could have put a follow-up date on it, or the algorithm says, let's kick this case back out. So also another thing that can kick your case out is you didn't file your returns, or in fact you didn't keep up with your estimate payments or withholding. But generally, if you're running up an accruing debt, IRS is going to kick it out. So how does this work real quickly? IRS is going to take a financial statement, either a 433F at the service center, or the revenue officer will take a 433, which is more detailed. They will review the financial statement, and they're going to look at two things. They're going to look at your asset pool, and they're going to look at your income and expense. The big thing here is the income and expense. And why is that big? It's because IRS has what's called a national standard. What's a national standard? The IRS, you can Google these, IRS National Standards for, so when you fill out your financial statement, IRS is going to say, well, you put this expense down and this expense down, but no, we're going to change that to our national standards. What are their national standards? IRS National Standards are this. Google them. IRS National Standards for food and clothing, IRS National Standards for housing and utilities, IRS National Standards for car ownership, IRS National Standards to drive your car expenses. So what you put down and what IRS wants you to put down are two different things. Here's the dilemma. You give IRS a financial statement, you don't know the IRS national standards, and rather than you show when you have no money left over, IRS now shows you $1,500 over. Your payment is $1,500. So if you want to get put in an IRS hardship, you must understand the IRS national standards in your financial statement. Anyway, if that's your case and you don't owe a lot of money, call them. You have nothing to lose. If you owe a lot of money, honestly, you should call a professional. Thank you for listening. We're available for representation. Leave me a comment, but more important, a subscription. Ask me any question you want. Thank you so much for listening.